All right, night, people. Night.
Yeah.
All right, so we're gonna start. Um, as usual, it's recorded, so whoever is not on right now will, of course, be able to get the information at a later time. All right, so today, initially I wanted to focus on probably like entry patterns, but I want to focus on something that I feel like is a bit more important. It has a bit to do with the videos that I sent to you the last time for you guys to review. Um, as I said, I really do believe that's a bit more important. And of course, entry patterns is not really a long topic or a tough topic. It has really just to do with like candlestick patterns. So at any point in time, I can just even send you like a sheet of what to look for and that kind of stuff. And yeah, but so today we're gonna focus on time of day. Time of day, very, very important time of day. Um, mentioned that in order for you to take a trade, there has to be certain characteristics or certain conditions necessary for a good trading day. I think last week we discussed, or last class we discussed the type of markets that you want to be trading in. All right, you want to be trading something that has that stepwise motion, as we call it, a trending market. All right, and of course we know the kind of conditions that we want to stay away from, and that would be a ranging market. Where market's not really going anywhere, and kind of trapping around, not really showing where it really wants to go. All right. So just a reminder, markets you want to be in, markets you want to stay away from. When was it? Last week, Friday. There's a lot of activity last week, Friday. Both during the London session, which would have been around the 1 a.m. to about 3, 4, 5 a.m. in the morning. And there would have been another beautiful opportunity during New York session, late New York session. I think probably New York close to like maybe 10 a.m. You guys saw a lot of big movements and stuff like that, but you were aware that there was news coming out because everyone should have their MyFX book up. So there's no excuse. You were aware that volatility would have been induced in the market. And what I mean by volatility, just simply that the markets would have been moving around that specific time. All right. So whether or not if you got your first trade wrong, you should have at least been able to get out, jump in the opposite direction, and you'd have made some money. All right. So again, these conditions we want to stay away from. That'd be a ranging market. These are the conditions that we want to trade in. A trending market, that is when we make the most of our money. All right. All right, guys. Just check for your mics as well. I know sometimes you guys may just get kicked out of the session. But just check your mics when you come back in. All right. All right. So again, like I said, if we want to trade, in terms of market conditions, the best market conditions, we need something that looks like this, and we need something that looks like this. We want to stay away from something that looks like that. And of course, we understand that as soon as we see price pushing in one direction, we wait for it to break an area that it previously had a reaction from, comes back down in that area, find some sort of, in this case, this would have been support, all right? Some sort of ceiling here to push off of. These is what we consider low risk entries. Stop loss would definitely be below this level. And of course, we're expecting high prices. Kind of the same thing, of course, in this case, all right? Break through a level that we previously had some sort of reaction from. And then, of course, we wait for it to come back up, find some sort of resistance or ceiling, and then we take that shot down, stop loss above here, okay? And of course, we realize that, of course, it doesn't always get back to this exact same point. It probably can stop a little bit here, or it can push back a little bit deeper. Either way, like I said, we will eventually run through the candlestick patterns of things that you could look at to help give you more confirmation when you actually want to enter a trade. But again, guys, time of day is very, very important, and we're going to run through some history and news events, and you'll see exactly what happens when and why I say it's not important to know exactly what the news is. It's just a matter of understanding that at the time the news are coming out, expect movements in the market. Okay. So again, conditions we want, conditions we want, conditions we don't want. Now, what you will realize is that, and I've noticed a lot of persons have been sending me some screenshots of some trades, kind of just getting my ideas on it. I like that. I really appreciate you guys are actually putting in some effort. It makes me really feel happy that at least you're putting up some work on your end. Now, it must be noted that a lot of times when these screenshots are sent to me about, hey, Ricardo, take a look at this trade, how does this look, and that kind of stuff. The currency pairs that you're looking at, and when we say currency pairs, US dollar is a currency, Canadian dollar is a currency. So one, two, that's a pair. That's what I mean by pair. GBP USD, GBP is a currency for the British pound, US dollar, all right? So that's a pair. Now, each pair has specific times of the day when it will move more than some. And it makes sense. So let's just say that we're looking at a pair that says GBP USD. This is the British pound. You ask yourself, what times during the day are the banks in Britain open? Because it's a banks and it's really that business activity that forces a currency to either go up or down. All right. So if you look at anywhere midnight, 1 a.m., 2 a.m., 3 a.m., 4 a.m., when the banks in London are open, we know that London's roughly about 7 hours ahead of us. Then you kind of see why certain pairs with GBP will or euro, GBP or the euro will move more during those sessions. Anywhere from 6 p.m. our time to like about midnight, and particularly 6 p.m. to like about maybe like 9 p.m., 10 p.m. Pairs such as the Australian dollar, the New Zealand dollar, and the Japanese yen will move very, very heavily. So I'll just put this down for you guys. So the types of sessions, sorry, we have Asian session, and that's going to be from 6 p.m. our time to about midnight. All right, midnight. Wow, midnight. And the pairs or the currencies you want to focus on is Australian dollar, the New Zealand dollar, NZDs for New Zealand, and the Japanese yen. Next, we have the London session, which is going to be from about 1 a.m. up until about 10 a.m. our time. And that you'll be focused on the British pound and the euro, and of course, the Swiss franc. All right. And then for New York session, so anything that is in the US, basically New York, New York. We're looking at about the window for New York for me is about 7 a.m. our time till 5 p.m. our time. Anything that with USD in it and anything with the CAD in it. All right. So this is what you want to be focusing on. So sessions at this particular time in our day, 6 p.m. to 12 midnight. The Asian hemisphere. So you're talking about anywhere that Thailand, that side, Australia, that side, China, Japan, that side of the world, the sun is up. The sun is up, their day has begun. So of course they have normal business activities, just like, oh, it's night for us right now. It is daylight over there for them. Okay. So of course their banks will be open, businesses will be open. So if you think about the currencies that, or rather the countries that are awake at that time, their currencies are more than likely going to be active. So it's just common sense. So the Australian dollar, the New Zealand dollar, Japanese yen. There are a few others, but these are the majors. So we only focus on these. London session, it speaks for itself. All right. 1 a.m. to 10 a.m. You can just calculate the time zones, the days. The banks are going to be open that time for that region. And of course, you can expect some sort of business activity, trade going on, news events coming out, anything to deal with these particular currencies. The European Union is massive. I'm not sure exactly how many countries it actually entails, but of course, Greece, France, Germany, Russia, I mean, the list can go on, all right? Well, since 2018, the Britain used to be a part of the European Union, but it kind of pulled away. So Britain is an independent nation now. Um, the process was called Brexit. It was a very, very big thing. You guys can look that up. So Britain no longer is a part of the European Union. All right, but it's still governed around that time because the banks in England would still be open during those time. And of course, same kind of principle. New York session again speaks for itself. New York is the heart of finance in the US, New York Stock Exchange, Wall Street. Yeah. So of course the US dollar will be very, very active around that time, and the Canadian dollar as well, because of course they sit on the exact same time zone. Now it must be noted, and if you looked at the videos that I sent you within the group, that there's specific times within these times when I like to say that the floodgates are open, or we call them kill zones. So, and it's just a term that some guy came up with. There's nothing particular about saying kill zone, but he's saying that these are the best times that you actually want to be able to place a trade. Think of like a floodgate, or let's say we're at Caymanas Park, ready up for a horse race. At a specific time, you're just gonna have the majority of the movement, like the beginning of the movement. Okay, so when everything is just bursting out, that is when we want to trade. For those who've been with me for a while, you notice whenever we get up at 7 a.m. and I always tell you, hey, New York session is opening, expect at least 20 to 30 pips in New York session. That's a floodgate I'm talking about. So for the Asian kill zone, you're looking at anywhere between 6 p.m. to about, I've noticed from my study and my experience, to about 9 p.m. All right. So even though this is the window for the entire Asian session, because Asia is open and active during these times, if you can place a trade, and you will find these opportunities, and I'll show you exactly why, you'll get the best movements and the best opportunities during this time. All right. So for London, it's going to be 1 a.m. to about maybe like 4 a.m. Let's put it at 5 a.m. This will be the kill zone for London. And I'll show you exactly why I say these are the kill zones very, very shortly, and you'll be able to appreciate that. All right. So 1 a.m. to 5 a.m. All right. That is when the biggest movement, or the start of the floodgate, as I call it, will happen. So if you can get in at this time, trust me, if you can hold on to your trades, you will definitely get a nice, really, really big push. And for New York session, it's going to be 7 a.m. to about, the floodgates is probably going to start by the latest 9 a.m. Yeah, latest 9 a.m. It may come a bit at 10, depending if there is something that comes out, especially news events, which you guys saw on Friday. So sometimes there's like an extra push a little bit later. But since I just gave you that answer, the reason why these specific times have the biggest movement during the overall sessions, or the overall banking hours for each of these sessions, is because of particular news events. So when the news events come out, they come out at these respective times. So if in Asia, if you see a news event come up for Australian dollar, New Zealand dollar, Japanese yen, I guarantee you it's within this window. London session, the news that comes out for GBP, Euro, CHF, I guarantee you it's within this window. New York, same thing. I guarantee you the news that releases is going to be within this window. So one of the biggest parts of trading is that we want volatility, volatility, volatility. Yeah, volatility. And what do I mean by volatility? I just simply mean that we want movement, we want action, we want things to be going in a direction, whether up or down. Okay, and that's usually due to the amount of persons that are participating. Um, at that point in time, the banks tend to try to move things around because, of course, they want to push price in certain areas. So volatility is key. It makes no sense you trade in a dead market. If the market's dead, you're going to get these kind of environments. You know exactly the environments I'm talking about. Yeah, when the market's dead, this is what's going to look like. It ain't going to move nowhere. You're going to be very, very stressed. You're going to be sitting at the computer for a good couple minutes, wondering what the hell is going on, not moving. You're going to be in and out of trades. Trust me, this is when you're going to be losing a lot of money. All right. So when I mentioned to you earlier that I do appreciate that everybody's, sending me screenshots and ask me, yo, Rick, give me an idea and stuff like this. I love it. Again, you guys are putting on the effort, is what I want to say. But you're showing me trades for currency pairs that are not going to move at that given time. You're just looking at a chart, you see something look like it's going to move up or down, and you say, all right, yeah, I'm gonna go buy or sell. No, no. Timing is important. Timing over everything else is important. If it's not going to move, it makes no sense to enter because you're not going to make any money off of it. You're going to be sitting there for 2, 3, 4, 5, 6, 7, 8 hours, probably going to fall asleep on the trade, wake up and get stopped out, upset with yourself. You know what I mean? So you want to be placing trades when the market's going to move. So you want to see that movement. And what does that do for you? It makes you feel a lot better psychologically. Trust me, if you place a trade and it moves in your direction, especially massively, you feel really, really good. When you place trades back and forth in conditions like this, you feel crappy at the end of the day. You feel defeated. You feel like you don't know what you're doing. You feel like all the information and all the time you put in forex don't make no sense. It's because you're placing it at the wrong time. There's not enough volatility. It's not the time of the day for that particular currency pair to move. Okay, so that's very, very important. So we need volatility. Volatility is absolutely, absolutely important. All right. Next thing, what do we need? So volatility, time of day. Just went through that a while ago. News events, news events, news events. Beautiful, beautiful. All right. And I think I mentioned to a couple of you before, it's not about trying to figure out exactly what the news is going to be. I like the fact that some persons are trying to analyze the news. Ain't nothing wrong with that. Look, knowledge is power. So the more you study, the more you learn about economies, it just benefits you as an individual overall and as a trader, knowing about what's going on in economies. Trust me, it's fantastic when you can have a conversation with somebody, especially intellectual conversation, and speak on topics that most persons are very, very foreign to. But at the end of the day, it's not the results of the news that you want. You are just trading around news events because you gain momentum. The markets will move on specific news events. So because the market's going to move and we make our money based on the amount that we trade and how far it moves in our direction, whether up or down, this is why it's important. Okay. So also I've mentioned to you that don't feel bad when you take a loss. Losses are important. A loss tells you that maybe you were not in the right time. Maybe your stop loss was a bit too close. I take losses. But if you trade around specific times of day with large volatility, news events that can also add momentum, then even if you get your first trade wrong, you should be able to jump on the trade in the next direction and just grab some money, make by what you lost and make some for the day because it must move. It has no choice. It must move. So you have that part of the equation. It must move. It cannot stay like this. When these conditions are there, it will not stay like this. It must move. Okay? And that's all you want. You just want it to move. Move, jump on a train, grab what you can get, and get out. You see me? Go your bed, do something else. All right. So, what we're gonna do right now, we're gonna just pick any random pair. I want somebody to give me a pair. Um, as you guys know, I only trade anything that has the US dollar attached to it. Okay. It's just easier for me. I've realized to trade around that. I've studied that, and I normally trade around New York session. So I can take advantage of literally anything because all of these US dollar, US dollar, US dollar, US dollar, US dollar, US dollar. So regardless, I can trade literally all of these during this session and still get some sort of money out of it. Okay. And of course I use the dollar index. So that also adds to um my analysis. All right. So anybody doesn't matter who, I see somebody sent me to the chat. So somebody said gold. All right. Someone said gold. Okay, fine. We're gonna look at gold. People like gold because gold moves a lot. And I understand it. That people like gold. I don't trade gold, but we can run through it, not a problem. Now, ladies and gentlemen, not because something moves a lot means that it's a good fit for you. I can show you pairs that move heavily. For example, this was when? This was Friday. Friday. And if I show you another chart right now of any of these other currency pairs and how it moved in relation to how gold moved, you probably would have felt much, much better trading any of these currency pairs. All right. For example, USD CAD. That's a massive mover. Massive, massive mover. Very, very clear. Very, very easy to understand. GBP USD. Massive, massive mover. Massive, massive mover. even USD JPY. Well, not really on Friday, but probably on Thursday. But anyways, let's get to gold. All right. Now gold, because gold is attached to the US dollar. Okay, so XAU is for the gold part, USD is for the US dollar part. You would only want to trade this guy around New York session. You don't want to trade it in London. You don't want to trade it in Asian session. You only want to trade this guy in New York session. Why do you want to trade this guy in only New York session? Of course, the USD aspect. So during New York session, on specific days, not every day. Trading is not an everyday thing. There's not going to be opportunities every day. Well, I shouldn't say that. There are opportunities every day, but they're not the best opportunities every single day. All right. Trade around the times that you're expecting some sort of news event to actually come out, and then of course you can take advantage of this. Now, I've told you guys to download the MyFX book on your phones. It kind of gives you those alerts. And if you want a little bit more detailed information as to what the news events are about, past news events, and how it reacts to the market, you need to then make your way to Forex Factory. All right. Let's see if I can just refresh this real quick. And by the way, we have some really good news coming up this week, some fantastic, fantastic news. Please take a look at your Forex Factory or take a look at your MyFX book. There's a lot of good news coming up this week. So we're looking at gold. Today is the 18th. Let's take a look at something that's coming out next week. I don't think there's anything on Monday for the US dollar. I'm just gonna go ahead and just use a filter. I'm gonna focus on US dollar because it's gold we're focusing on, so we don't need to look at anything else. I want high and medium. So the red is always high, orange is medium, the yellow is I think a bit low. And the color that's associated with the impact, notice it says impact here. The red one means it's gonna have the most impact. Doesn't mean it's gonna go up or down. It just means it's going to move more. The orange, obviously, the yellow. So this is the most movement, second most movement, the third most movement, and there are exceptions to that. And I'll show you a little trick, some little insider information as it relates to that. Let's apply this filter. So on Monday there's nothing for the US dollar. So don't trade gold on Monday. Don't trade gold on Tuesday. Wednesday is when you want to be trading gold, and you need to be very, very careful. Wednesday is going to be a hot, 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 hot day for gold. All right. So please be careful. Now, when you click on the little folder right here that says detail, you're able to actually see exactly what the information for this particular news event is going to be. Okay, so this is the Federal Reserve. Who is the Federal Reserve? The Federal Reserve is a major bank in the US that sets all forms of policies, whether it's interest rates, inflation rates, whether it is to pump money into the economy, things like that. They control the US dollar. So that's why this is a red news day, okay? Which simply means that once the information comes out for this, depending on the overall sentiment of the market, meaning depending on how everyone kind of views what the news is coming out or where the banks want to push price, you're definitely going to see some massive, ridiculous movements on Wednesday coming. All right. So, of course, the Federal Reserve, more hawkish than expected is good. Hawkish simply means price going up. All right. You'll eventually get used to majority of these terms. But anyways, let's look at some notes. This report includes the FOMC's projection for inflation. If you don't know what inflation is, just Google it, please. And economic growth over the next 2 years. And more importantly, a breakdown of individual FOMC members' interest rates forecasts, source first released in April 2001. Why traders care? It's a primary tool that the Fed, which is the Federal Reserve, uses to communicate their economic and monetary projections to investors. All right, a bunch of fancy, fancy stuff. But if you notice here, there are various different dates that we have the information being released for this particular news event. So this right here says what, June 16th, right? June 16th, 2021. So I'm just going to go to June 16th, 2021 at about, it says 1 p.m. 1 p.m. that time. Let me see something here, 1 p.m. that time. So this is going to be later on the day. So all right, so 1 p.m. So the date for this is what? June 16th. June 16th. Let's go to June 16th. June 16th. June 16th. It's 20th, 16th. Right here. I'm going to zoom in a little bit. June 16th, ladies and gentlemen, for the lovers of gold. Right here. Right here. Oh, by the way, this time is in what should I say? I think this is in 24 hours. So it's not going to show 1 o'clock here. But we can count the times for you just to ensure that it's around that time. And you see this big mass movement that you see right here? Yeah, that's news release. So New York session would have started anywhere around here. So 8, 9, 10, 11, 12, 1 o'clock. The news would have been released after the end of this candle at 1300, 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock. So you'd have waited for the entire week. Haven't done anything here. And then on this one day, all right, this one day, you could have been able to catch, what's that, 5008. So that's roughly about, that's a lot of pips. That's a lot of pips. So if you had put 0.01 on this one trade in terms of lot sizes, you're probably looking at hold on. That's almost close to $500 right there. That's almost close to $500 right there. Let me see if I'm right. Probably not $5,000. No, $50. $50. So with a 0.01 trade, you'd have made $50 in the span of 1, 2, 3, 4. Obviously, I'm not expecting you to hold for the entire move, but as you can see, a complete meltdown just due to news releases. Yes, you could have traded on the day before or the day before, but if you know that there's going to be an increased volatility, if you know that the market is going to move heavily on a specific day, don't waste your time on anything else. Focus on this time. Do everything you need to do on the other days. Don't waste your time on those days. This is what you focus on. This one move right here, so depending on the amount of lot size you use, could literally replace your entire monthly income. I'm not asking you, I'm telling you that. If this was a one lot trade, this is 5,000 US dollars in 4 hours. If that was a one lot trade, put that into perspective for you. If this was a one lot trade, if this was a 0.1, that's $500. That's still anywhere close to $60,000 to $70,000 in 4 hours. Right there. Let's go back to Forex Factory. Let's look at March 17th, 2021. And that's just one news release we looked at now. When there's tons of news releases happen every single month. So March, let's see if the charts will allow me to go back to March, February, March. I think March might be a bit far. Trading view doesn't really make you go that far. Let's just see March, April. I think when March, we said March, what, March 17th, March 17th, 17th of March, right here. Let's look at the times. Same amount of time. You see that nice big push right here? Let's calculate the time again. So New York would have been about here. So 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock. This is when the news would have been released right there. Let's go back. Let's go back. What time does it come out? Oh, by the way, the times would remain the same. I'm sorry, I didn't let you know that, but the times would remain the same. So regardless of the respective dates, it's the exact same time. So it says 1 o'clock here, it would have been 1 o'clock on these exact same dates as well. All right, right here, right here. You forget all of this. You forget all of that. You forget all that. You focus on one day. On one day. So I mentioned to you that it's not very hard to use small amount accounts and flip them and turn them into cash, but you have to have the right kind of market conditions. So if you don't have the right kind of market conditions, you can't be expected to make this. All right. And by the way, this is just gold. If I went to any other pair with the USD attached to it on these respective days, on these times, they will move the exact same thing. Probably not to the degree that gold would move because gold tends to move a little bit more in terms of pips, but the same principle applies. 2512. So with a one lot trade, you'd have made $2,500. I think my math is right. I think my math is right. 2,500. 0.1, 250. And of course, 0.01, you're looking at $25. So if you had like a $10 account, your account doubled in one day. All right, $20 account, your account obviously double same way. All right. Let's then go to, what's this? 8 more minutes left on this call. I don't think the chart's gonna allow me to go to December 2020. No. I feel like if I keep going back, it's just gonna stop. Trading views like that. For those persons who've used trading view before, at some point in time, it kind of just stops you. But let's just see. Let's see if we can go to December, February. Oh yeah, we're in January right here. Oh yeah, we're in December. Okay, we found December 16th. Let's see, December 16th. 16th to 15th. 16th is right here. I think somebody sent a thing. I've used. All right, cool. Yeah, man. I mean, it on the MetaTrader, it tends to go a bit further. TradingView tends to get stuck sometimes. That's just my experience still. Let's count the times. I'm counting from 8 o'clock because I know this is when New York session would have opened. So I know this is 8 o'clock, 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock, 2 o'clock. This particular news event right here. So it does push down, gives you that false move to the downside. All right. So even if you had sold somewhere here, and even if it went back up, you still should have been able to gotten in and at least clap some money on that. All right. So now I'm gonna focus on another pair. Let's use something that doesn't really move as much. AUD USD. All right. Australian dollar. Something that doesn't really move as much, but gonna show you how with the time of day, and only reason it's going to move is because of the USD aspect, not because of the AUD aspect. The USD aspect. The news that comes out is going to be for the USD. So let's go back to Forex Factory, June 16th, June 16th. And this is a pair that does not move a lot. But I'm just going to show you what you could have collected on a pair that does not move at all. June 16th, June 16th, July, June 16th, right here, right here. This is AUD USD, people. AUD USD probably on a day-to-day basis only gives you about 30 pips. AUD USD on that day gave you 100 pips. Beautiful, absolutely beautiful. Let's count the times. Right here would have been 8 o'clock, 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, 1 o'clock. The news is released on this candle. Disgusting. Absolutely disgusting. With a one lot trade on this, you'd have made $1,000 in 1 hour. I'm just putting it into perspective for you. 0.1, that's $100 in an hour. 0.01, that's $10 within an hour. News releases. Um, March 17th, just so I'm showing you that it's consistent. It happens over and over and over again. You don't need to be trading anything fancy. You don't need to be focusing on a bag of different things. I see people out there teaching people about Elliott wave and this and that. It's just garbage, people. It's just fluff. You only need momentum. You only need volatility. You only need the markets to be moving for you to make cash. So kind of clear your mind of all of the other clutter. It's not necessary. Indicators aren't needed. Moving averages aren't needed. RSIs aren't needed. Okay, those are just mathematical functions and they lag. But you will learn this over time. Sure, Mr. Brown, go ahead.
Yes, man. So basically, what you're showing us now is that based on the new release, and when you went on my Forex book, it's showing it comes up on the history side that if you look back at the given dates, this kind of movement is possible. Is that what you're saying?
Yeah, man, every single month. There's news releases
Every
that come
single
out
month,
every single week, every single month. There's anywhere
right?
close to like 20 different news releases every single week. Well, not every single week, every single
Right.
month on all pairs. So if it is that you can identify the days and the times that these things will occur, what it is that you guarantee yourself is that it's going to move. It must move, meaning it must either go up or it must go down, and it's going to go by a massive amount. So what this helps you as a trader is that you don't have to worry about being right or wrong. You don't. You just need to get in on any other side. You can use the same principles we use in terms of um you can use the same principles in terms of support and resistance that we did in terms of buying and selling at the ceilings or the roofs. That's fine. You can use that. But I'm letting you know that you don't have to worry about it. because you have the fact that it must move at that particular time. So even if you close your eyes and said, I'm going to buy, okay, buy, put your stop loss at a decent place. If it goes in your direction, it goes in your direction. If it goes against you, jump out and go in the other opposite direction because guess what? It must move. All right. And this is just one news event I'm mentioning, this is one. This is just one. All right. Even though all of these came at the right time, but this is just one. Let me take a completely different news event. And let's use something that is not USD related. Let me go back to my filter. Let me focus on something that's not USD related. Let's focus on something that is purely um let's go for something that doesn't move that much. Australian dollar. Apply a filter. And let's see if there's anything for Tuesday. Nothing for Australian dollar there. Australian dollar monetary policy meeting. Okay. So okay, that's going to be on Monday at 8:30. What did I say about the times for the Australian dollar? What did I say about the window? That floodgate when the news is going to come out? I said from 6 to 9, 6 p.m. to 9 p.m. That's 8:30. Let's go to the 16th of August. Oh, sorry, I didn't talk about there. To the 16th of August. 16th of August. We have 1 more minute before this closes, guys. So just give me a sec. We can run through some more. 16th of August. August 16th. So what this helps you with is that instead of wasting a time trying to trade every single day because you see something going up or going down, you pinpoint your focus on specific days of the week and specific times of the day so that you can maximize on your opportunity. It's kind of like this. Instead of you trying to fight it every single day, every single day, every single day, you just focus on the times it's going to move. It does so much for your psychology. I'm telling you, it does so much for your psychology. It makes you feel so much better. Because instead of you sitting down there in drawdowns, instead of you always losing money and stuff like that, you're trading only when it's going to move and it must move. All right, I think we have less than a couple seconds. So this is the 16th right here. The day would have started at 6, 7, 8, 9, 10, 11, 12. This movement right here, so from after the news event right here, you'd have gotten this push. This beautiful push right here. You don't need no more than this. This is AUD USD, something that doesn't move a lot. And you've gotten about 30 pips on this. With a one lot trade, that's $300. With a 0.1 lot trade, that's $30. With a 0.01, that's about $3. It's still a massive amount of movement right there. So you guys can look forward for Monday.